What is the single most important thing that determines success in investing? It's not about picking the right stocks. It's not about timing the market, and it's definitely not having a huge starting balance. And a lot of people would think you need a big balance to start off with, but really, you don't need any of that. You want to know what the real answer is? The answer is to be consistent with your investing. So if you show up and you're putting in the work repeatedly over time, in my case, if you're doing this on a week by week basis and you stay disciplined for the next few years, you're going to see incredible results. And I wanted to break this down, this idea of consistency and why it beats everything when it comes to any type of investing or trading success. So, I have been in the investing and the trading space for a long time. I started out as a traditional investor in my late 20s. Little and behold, I realized that wasn't really my thing, and I didn't do well in it, and I got pretty frustrated with it over time. But as I got into my early 30s and I started learning how trading works and so forth, then my mind really changed a lot. Now, to put it into context, I don't do any of the aggressive or the crazy trading stuff like forex trading or day trading and so forth. That's just not my thing, and it takes up a lot of my time and energy, and it can be very stressful, and uh, it can lead to anxiety as well, especially if you don't like losing a lot of money. So, but since I started trading a couple years ago, I've made it a habit to invest and trade on a regular schedule, you know, and this is something that I do on a weekly basis, which I do within a couple hours a week. So, and regardless of how the market is performing, even if you were to stick to it and if you stick with your consistency over time, then you can still see incredible results if you just stick to it long enough. And staying consistent has become more valuable, or it can become more valuable to your growth than any other single big trade or the perfect stock pick. I can't tell you how many times that those who are in the trading space, they will try to find the perfect trade to get into. Or if you're in investing, you find that perfect stock that is just going to balloon. And a good example of that would be there are a lot of people out there who think they're going to try to find the next Tesla. Now, I mentioned Tesla because it wasn't until like 16 years ago that Tesla was not really that big in the investing in the trading space. When Tesla launched its IPO back in the early 2010s, I mean, no one really didn't know that Tesla was going to be like a winning stock. And you'd be lucky if back in 2010 you had predicted Tesla to be the next big stock. Then you would have won big time. But now these days, there are people out there who are trying to pick that perfect stock, or they're trying to pick that one stock that could be the next big Tesla. Well, there are hundreds of small companies out there that could potentially be the next Tesla. And the odds of you trying to find the next Tesla today, I mean, look very slim, and it's extremely hard. I even know of companies that could be another Tesla in the making, but I could very well be wrong. And why should you have to spend all your time and energy predicting and speculating on which company could be the next Tesla or the next Amazon or the next Nvidia or the next Apple? All these companies I mentioned have had their own peaks at times uh, and so forth. And I think it's a fool's errand to try to pick that perfect stock because That's pretty hard to do in this day and age now that investing and stock trading is becoming has grown into popularity over the years. And so rather than spending all your time trying to pick the next Tesla, then try to stay consistent. And that's in any market condition. Whether the market's going up, it's going down, or sideways, you still want to stick to it. And as I record this video, the market has been acting really weird lately. It's been going down a lot and then sideways, but has not really gone into like an upward trend direction. There have been times where the market has gone up, but it looks like it's a false breakout. And so what's going on right now is that the market's been acting a little shaky and it has been down more often and so forth. And that is a result of, you know, how the market is reacting to uh, monetary policy set by the Federal Reserve and also current events around the world, particularly in the Middle East. But even with all that stuff going on, I still stay consistent with it. I trade when things are not going well, and I make sure to put in a small, well, maybe not a small contribution, whether big or small, but you still contribute to your account. Because if you stick to it long enough, uh, once recovery or the recovery stage happens, and when the market goes up, that's when it becomes easier, and so forth. So that's really something to keep in mind of, and staying consistent, even during those times when it's not feasible to be in the market. That's when you have to hold your horses and really stick to your guns. And here's the problem: most beginners will jump from one strategy to another, and they'll chase those hot tips and they try to time the market. And really, timing the market is probably the worst thing that you can do. You know, a lot of them get excited for a few weeks, but then they lose the motivation and they stop investing altogether when things get boring and difficult. And when that happens, that is the worst time to really quit altogether, because when you quit, or if you stop for a certain time, or if you decide to lock in losses, then you are doing yourself a disservice, because you are losing out on probably what are the most some of the best opportunities to really make money in the long run. And that's why I bring back to my point up earlier, is that you want to stick into it in the long run, because once the recovery stage happens, then it becomes easier over time. And that's where you can make the most money and become profitable in the long run. But inconsistency, that's what destroys compound interest. And when you decide to not stick it long enough, then that's where poor results come in. And most people will stay stuck with the poor results because they never stick to that one approach long enough for it to work. They don't stay in it for the long haul, or they're not consistent enough. And so what you have to do is you have to focus on being consistent above everything else, whether that's investing a fixed amount every week or every month. And you have to stick to your plan, even when you don't feel like it. And for me, I have my own trading plan and so forth. And I understand that the small, regular actions that I make over time and throughout these years, what I'm doing right now, I know it's going to create massive results in the long run. So even on a day like today, when my overall portfolio is down right now, and keep in mind, this is all unrealized losses. So if I were to log into my brokerage and I saw my overall accounts, everything would be down across the board. Now, that is on an unrealized loss level. So hypothetically, if I were to say I wanted to sell all of my assets, or if I wanted to liquidate everything, then that's how much money I would lose. But I'm not going to do that because at the moment, I have not made the decision to sell them, and those are unrealized losses. So, what I need to understand is that I got to ignore that part and really keep up with the small habits I'm doing right now because once the recovery stage happens, then when I log into my brokerage one day, everything's going to be greening up. I know the term unrealized gains and losses may not resonate with you, or it may not be something that clicks to you right away, but that'll be something I'll talk about in another video. And in that case, when you look at the unrealized gains and losses, you got to ignore that because that is just uh, monopoly money right there. And that's something that I completely ignore, especially when the market is down. Uh, you don't want to be uh, obsessed over those numbers. So, so you got to let the compound interest do the heavy lifting, and you got to stay in the game for the long term. And at the same time, ignore the unrealized losses. Because if you obsess over those, then you're going to lose out more money in the short term. So here's some key takeaways. The first one is consistency beats being intelligent. You don't need to be a genius, but you just need to show up consistently. And whether that's every week or if you're doing it on a monthly basis, but I highly recommend doing it every week. That consistency over time will pay off. Second one is that small consistent actions becomes extremely powerful when combined with time and compound interest. If you're consistent and you're taking those small steps every week, that'll add up to big steps and much bigger results in the long run. You don't want to look at the quick wins this week or next week, but you want to look at the long-term results that you could potentially see in 3 to 5 years. I always look at the 5 year horizon, and all I can just see is just uh, amazing results if I stick to being consistent in my trading. And then number three, you got to stay disciplined even when the results are not exciting. And that's where real wealth is built. And in times when it's not exciting to look at, or you don't like looking at your numbers in your brokerage account, that's the time to take a deep breath, to pause and reflect and say, hey, I got to keep doing this. I got to be patient and disciplined. And if I stick it out long enough, and I do this on a weekly basis where I'm practicing compound interest, then that's where real wealth is truly built. And if you stick to that over time, 5 to 10 years, you're going to thank your future self later on. So, to recap, the most important thing is investing. When you're investing, it's not about finding that perfect strategy or, heaven forbid, finding that perfect stock. It's about staying consistent in the long term. And I can tell you that if you master consistency, you will be ahead far much more than most investors will in 5 to 10 years. I mean, there is a big difference between someone like myself who trades options every week versus the you know the the smart aleck who is just gonna try to spend all his time and every day, all day, trying to find the next Tesla and think that he can go from $1,000 to $250,000 in 10 years. Why not take a more simpler strategy where I trade options and I do a 1% a week in compound interest, and then in 10 years that could potentially be a seven-figure portfolio. Now, let me ask you this. Would you rather be the guy on the street trying to find the next Tesla and think he can get $250,000, or would you rather take a simple approach in trading every week, do 1% a week, and then in 10 to 15 years over time, maybe sooner, you could have a seven-figure portfolio. Now, that's the difference between being a short-term speculator and someone who stays consistent every week and builds long-term wealth. If you want to learn how small, consistent improvements can create huge results in your investing and wealth building, then I encourage you to check out my latest ebook called The Power of 1%: Why Slow, Steady Profits Beats Chasing Greed. And in this ebook, I go over uh, how 1% a week and compound interest can really grow your wealth exponentially. And I lay out specific examples, and I mention a free tool that you can start using to see where uh, a starting balance of $5,000 or $10,000 can take you in 5 to 10 years. And I can tell you through that tool, if you start out in a $5,000 to $10,000 brokerage account and you trade that every week for the next 5 to 10 years, that'll easily exponentially grow into a 6 to 7 figure portfolio. And if you don't believe me, then I want you to grab that ebook and you can play around with the calculator yourself and you can see the power of compounding interest. So, but if that interests you, be sure to check out the link in the video description below. You could also scan the QR code at the end of this video, and once you're on that page, you could sign up for my email list, and then within a few minutes, you will get your free copy. So that's all I got for today's video. Let me know your thoughts in the comments section below. Are you someone who, you know, has had trouble with this idea of being successful in investing, or have you thought about whether you want to be that short-term speculator on finding the next perfect stock, or do you want to find a more simpler approach where you can just do it 1% every week and you have much more upside in the long run? Would you rather be the guy who wants to find the next Tesla, or be the one who is slow and steady in growing their account every week, where it could potentially be a seven-figure portfolio in under 10 years? Let me know your thoughts below, and I'd be curious to read them, and I'd like to start a conversation. So, but that's all I got for today. So check out the ebook below, and until next time, peace.